Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 27th of January 2021. Alright everyone, into the news we go. So before we dive in, actually, I just wanted to give you all a heads up that on January 28th, so in a day or so from now, for the US, in I guess like tomorrow for me, at 7 p.m. Eastern time, I'm going to be doing a kind of guess like roundtable discussion in the Gitcoin Discord server. So I'll leave this link for you in the YouTube description, and you can go join the Discord server and kind of like get ready for it. But basically, just going to be talking about, whatever comes to mind, whatever's trending right now in the ecosystem, whatever you want to talk about, I'll be there answering questions and stuff like that. So definitely, come along to that. It's going to be really fun, I think. So Philippe put out this really cool thing that he made today called collectible lists, which is basically a fork of Uniswap's token list standard, and this is basically for collectibles instead of just ERC20 tokens. It's for ERC721 and ERC1155 NFT contracts. So for anyone who's been on Uniswap, you'll know that when you go to select the token list, you have a bunch of different lists to choose from. There's ones from CoinGecko. I saw Gemini has one on there. 1inch has one. There's a ton of them out there at the moment, and this was done to protect users from scam tokens and accidentally kind of choosing scam tokens when going to Uniswap or inputting them the wrong token address in and kind of getting scammed. So yeah, what Philippe has done here is he's done this for collectibles, right? So NFTs and stuff like that, which I actually think are more prone to kind of scams than normal ERC20 tokens are, because there are a lot of different NFTs, right? By nature, NFTs are non-fungible, which means that they are unique, right? They are not basically like, they're not fungible like ETH, where every ETH is one ETH, or other ERC20 tokens where every link is one link. It's the same kind of thing. Every link is a link and all that sort of stuff. Whereas with NFTs, every single one is unique, right? Well, not every single one. There are doubles and stuff like that, but the whole point is that they are unique. So it might be very easy to get kind of scammed like that, especially if you're a newer user. So yeah, Philippe put together this kind of collectibles list here, which I guess is in a JSON format here. So if you're a developer or someone familiar with that, you'll be able to go view it here, kind of view what he's done. I think this is just really, really cool. So yeah, if that's something you're interested in, you can go check it out. I'll leave the link in the YouTube description for you to go check it out. So Krugman put this interesting tweet out today, and I'll read the tweet out. So open quote, fact, over 90% of stocks underperformed the S&P 500 in the long term, which is the stock index, the main stock index in the US that tracks the top 500 companies by market cap. DeFi will not be any different. Many token pickers are finding out the hard way right now. I'm becoming more and more convinced in just using ETH and DPI and skipping gambling for 10 times micro cap trades, end quote. Now, before I dive into this, I want to say that nothing I say ever on the Daily Gwei's investment advice, so don't take this as that. But I thought it would be an interesting discussion to kind of have around, you might be out there trading different things right now, like trading different tokens, trying to chase different tokens, stuff like that. And your benchmark, could be US dollars, right? Now, in a bull market, everything tends to go up with, the majors. So like Bitcoin and ETH, when they're going up in USD, everything else tends to follow, right, in USD. But if you start measuring it against another asset, right, and trying to outperform that other asset, things change. So in the crypto space, people like to measure their performance against BTC and ETH, right? That makes a lot of sense. If you're not outperforming BTC or ETH, then why are you even holding these other things? You should have just held, BTC or ETH, right? For example. Now, I mean, that's true, right? That definitely does make a lot of sense. And it's the same kind of logic that we see in the traditional market where, if you pick individual stocks, you buy individual stocks, most people do underperform just the S&P 500 index, which, as I said, is an index of the top 500 companies by market cap in the US. Now, this index on average returns 8 to 12% a year, I guess like averaged out over many years, many decades, because it's been around for quite a while. Now, 8 to 12% might not seem like much to us in crypto. We're spoiled, right? ETH went from, I guess it started the year last year at $120, $30 or something like that, and by the end of the year, it was pretty much at $1,000. So we are definitely spoiled in crypto. But that's because we're still so early. I think eventually, those gains are definitely going to come down. It's not going to be like that for a lot of this stuff. But if we kind of take the I guess the comparison here and say, say you bought ETH at the start of the year and then you bought some other tokens at the start of the year, and then, what outperformed, right? Did the DeFi tokens that you buy outperformed? Did all of them outperform? In aggregate, if you bought 5 different tokens, did those tokens all outperform ETH, right? If you can kind of measure this by saying, okay, what if I put like $1,000 into ETH and $1,000 into these 5 DeFi tokens? By the end of the year, what would I have ended up with more, right? Which one would have given me more USD? For a lot of people, the answer would have been ETH, because of the fact that it's just so hard to, one, pick tokens that are going to outperform in the long run, right? Two, make sure you don't trade away those the gains that you get, right? You might see all these gains and you might be like, oh, okay, well, I made some gain on this, I'll trade this and I'll go buy something else and maybe I'll make more money there, and then end up losing money. 3, taxes for a lot of us, right? In the Western world, we have to pay taxes. And by incurring these taxes, we also reset our cost basis. So if we're waiting for like long-term capital gains to kick in, this is especially prudent for the US and where I am in Australia, you basically have to reset the counter. So long-term capital gains kicks in after a year. So if I buy ETH today and I wait a year, I get a tax discount on that, a capital gains tax discount. But if I buy that ETH in a month time, trade that ETH for a DeFi token, for example, I realize capital gains on the ETH gain, right? Short-term capital gains, which is a very hefty tax, because its tax is the same as your income tax without the discount. And then with that DeFi token, I start from day 0 again. So my cost basis is day 0. So if I hold that for a year, I'll get the discount. But we know crypto moves so quickly, so I'm not going to hold that for a year, most likely. So then when I trade it back to ETH, right, I owe tax on that, and I owe short-term tax on that, and then I reset my cost basis again. So I start from day 0 with the ETH again. So you can see how, by the time you get into long-term capital gains on a lot of this stuff, you would have just been better off holding ETH from the beginning rather than paying the taxes going in and out. So that's something I think a lot of people forget, especially, where you have to pay these higher taxes, is that that'll eat into your profits, and of course you don't have to pay taxes until a certain date, right? It depends on when you have to pay them in your country, but you don't want to be gambling with your tax money, right? Like if you make a gain and then you say, okay, well, I won't take it out to fiat just yet. I'll put it in my bank account and leave it there for taxes. I'll use it within crypto, right? But then what ends up happening is that, you may lose that, and then you've lost your tax dollars, and you're like, oh no, I have to make this back now. And then you kind of like revenge trade. So you try to trade your way back up to where you were, and then you're trading emotionally, and then it becomes a disaster. So this is why most people underperform. It's not because you can't pick the better kind of assets, right? I think a lot of the DeFi tokens outperformed ETH over maybe the last 1 to 2 years. But the problem is that buying and holding is so hard in this space for anything that moves so quickly. Like I'm comfortable buying and holding ETH, right, for a long period of time. I mean, I never sold any of my ETH up until this point. Every single ETH that I've bought from when I first bought in early 2017, I have not sold. And any of like the DeFi tokens that I buy has been with fresh capital, or I think I've traded some ETH for it at times, but I've incurred tax there, and I've kind of not done that because I didn't want to incur more tax. But I've never sold ETH to fiat, for example. So. And that's simply because like I'm very comfortable holding ETH over the long term. I want it all to be in long-term gain so that when I do sell some eventually, and yes, spoiler alert, I'm going to sell some ETH eventually. Like, I need fiat too, right? I can't pay my bills in ETH, unfortunately. And even if I was to pay my bills in ETH, I'm technically selling it, I guess, like still disposing of it. So it's the same thing. Anyway, I won't go into that. But basically, anything else, really, even some of the top DeFi projects, I just don't feel comfortable holding those things for many, many years. I want to take profits. I want to go into something less risky. So timing all of that is just so hard. And that's why most people underperform the benchmark being BTC or ETH. And it's just the reality of it. So, I mean, me particularly, I think I am confident enough that I can, invest in some of these DeFi tokens and outperform ETH. But at the same time, I'm still mostly ETH because I don't know the future, right? I'm not an expert trader. I'm just like an investor who likes to invest in things that I find valuable. And you might, you might be the same, right? But at the same time, for every one winner, there's like 9 losers. That's just the statistics from the stock market, from crypto, especially in crypto because it's so volatile. But anyway, as I said, none of that's investment advice, and maybe I've ranted on for a bit too long there. But I have so many people talking to me, and they ask me, what should I buy? When should I sell? Blah, blah, blah. And I never really tell them, I never tell someone what to buy, for example. Like, I don't say go up and say, for your situation here, I think you should buy ETH, and I think you should hold it for a year to get the capital gains discount, and then sell it. I never say that. I never will say that because I'm not a financial advisor. And even financial advisors can't tell the future either. So yeah, that's a whole other thing. But basically, what I do say is that obviously the meme of do your own research applies here. But at the same time, if you just want diversified exposure to DeFi, then buy the DPI, like the DeFi Pulse Index. That's going to give you diversified exposure to all the large cap DeFi assets, and it's relatively safe, automated rebalancing, passive exposure. You don't have to worry about it. You can just keep it in your wallet and you're good to go. Or buy ETH because you want exposure to the Ethereum kind of network and all the growth that's happening there. And then if you want to go venture into these smaller cap things or these kind of more risky bets, you need to be prepared to lose all your money, right? You need to be prepared for the emotional hardship that comes with that. Like, no one likes to lose money. And then you got to be careful not to overtrade and start eating into your other positions. So it's a mess. So that's why most of the time I only talk about really ETH. Like, I don't want to talk about the DeFi tokens that I hold because I do realize that I have a large audience and I don't want to be kind of influencing kind of decisions that people make. So I rarely talk about the DeFi tokens that I hold, unless I give a disclosure because I'm talking about a project that I hold a token for. But that's also because, like, I'm no guru, I'm not a genius, right? Just because I've been around for a while doesn't mean I know the markets better than you do or better than someone else does. What I do know is that I like investing in projects that I believe in, like actually believe in. I'm not just trying to do a quick flip. And I like feeling comfortable holding them for the long term. So I really just invest in people at the end of the day. If I really like the team, if I think they're doing amazing work, if I think their product is good and the team has the ability to ship that product and to keep growing it, then I will, probably make an investment there. If I lose that confidence, I'll probably sell. And I think that's how you should kind of approach these things. If you're not confident in something that you're holding, then you probably shouldn't be holding it. Again, I know I say this a lot, but again, not investment advice, and I'm probably going to stop there. But obviously, I have a lot of thoughts about this, and I just wanted to share them with you all because some of you might be new to the ecosystem, and it's very overwhelming, right? Choosing where to park your money. And, during a bull market, you might feel FOMO if you're only holding ETH, and, ETH goes up 5 times, but then you see all these other things that go up like 20 times, and you're like, oh, I should have just bought that instead. That kind of thinking is just going to get you wrecked because you're going to overtrade. I've seen it so many times. I've seen so many people do it. You just need to come to peace with the fact that you are looking back at the future. Back in the past. You're applying hindsight to something that's happened, and you're thinking that you could have picked that, and no one could have picked it, right? There are very few people that can pick that. Even a lot of the funds, right, don't get a lot of it right. Everyone's a genius in a bull market because everything's going up, but the real test is during bear markets when you can invest in something and make money there, and there's very, very few people who can do that, especially within crypto. So just something to keep in mind when kind of investing in this space. But do make your own decisions. Don't listen to anyone else. Definitely don't listen to crypto Twitter thought leaders, including me. We're not any more kind of like any more of an expert than you are. We just, we've done our research. We've made our investments based on what we think, is going to go up and it's going to make us money. But at the end of the day, the only thing that kind of like I will shill a lot is ETH, because I really, really believe in ETH, right? And it goes hand in hand with the Ethereum network. And I really do think that, obviously I think that ETH's going to keep going up, but I talk about it a lot because I think that, the asset itself has been kind of brutalized over the last few years. And it's good to finally feel like, I've been vindicated, right? And a lot of the Ethereans have been vindicated by the price move up as well. So yeah, anyway, I'm going to stop there. On to the next thing for today. So Nick from MakerDAO put out an announcement here that Uniswap LP tokens are now available to be used as collateral within the MakerDAO system. So if you're a liquidity provider for the WBTC ETH pair or the USDC ETH pair on Uniswap, you can now use your liquidity provider token, so that token you have in your wallet that's an ERC20 token, that is basically an IOU for your liquidity, you can use that as collateral on MakerDAO to draw DAI against. Now, this is awesome. This is something that's uniquely enabled by DeFi, and something that gets a lot of people excited about DeFi is this concept of, and Dan Alitza coined this term a while ago, called superfluid collateral. What this means is reusing assets within DeFi, essentially. So what you're doing here is you're earning fees on Uniswap by providing liquidity, right? You're using your LP token, which represents those fees and that liquidity, as collateral in MakerDAO, because if you do get liquidated, that LP token can actually be used to withdraw your liquidity in Uniswap to kind of pay down that loan, right? But even still, you can draw DAI against it, and you can go do whatever you want with that DAI. A lot of people use it as a leverage tool. They'll go buy a token or whatever. They'll go buy some more ETH or whatever you want to do. I just think that's amazing, right? That is literally, prior to all to any of this kind of stuff happening, the LP token in your wallet just usually sits there, right? It is accruing fees as the pool accrues fees, and you get paid out from that, but it's doing nothing else. So why not unlock this capital, right? Why leave this dead capital there? Why not reuse it? And that's exactly what you can do now with MakerDAO by using your Uni LP tokens here, which I think is just absolutely incredible. This isn't the first example of this, but I think this is one of the biggest, because MakerDAO is obviously the biggest DeFi project still, and Uniswap is one of the biggest too. You have been able to put your, YUSD into Cream, for example. YUSD is basically yield-bearing USD from Yearn. And that's been there. You've been able to put your staked ETH from Lido, so ST-ETH, into a Curve Finance ST-ETH pool, and earn trading fees there, and earn CRV tokens, and earn LDO tokens. So people like to look at this actually and think, well, this is all house of cards, it's all coming down, it's all a Ponzi, right? Where is this money coming from? But if you actually track back the trail of where this money is coming from, you will understand. So let's take this Uniswap MakerDAO example. So let's start from when you've drawn DAI and you bought ETH with it. So the MakerDAO system is making money from this because it charges a stability fee, right? The stability fee is basically an interest rate. So where is that stability fee coming from? Well, it's coming from the person who borrowed DAI. Now, where are they getting the money for that? Well, maybe they bought ETH. ETH went up a little bit, right? And then they sell it, they make a profit, and then using the proceeds from that profit, they basically repay their loan, right? With the principal, and then the profit, a little bit of the profit, it goes towards the fees, right? Okay, so where did those fees come from? Well, someone else bought ETH from them, with their own money at a higher price than the original person paid for it, right? Okay, so where did that person get the money from? Well, that person got the money from the real world, right? From their job or from another asset that they sold or whatever, Say it's from their job, so they got fiat. Okay, so where did that money come from? Well, okay, the fiat came from the central bank that printed it, right? So you see, that's kind of like coming into paying down the stability fee, and you can track that trail all the way back. There is no money that's being made up except at the central bank level, right, where it's already being printed at. And that's already how a lot of this stuff works, right, in the real world, or in the traditional world. Okay, so let's go to the Uniswap tokens now. So while the Uniswap LP tokens are being used as collateral, they are still generating fees on Uniswap. So every time someone trades in the USDC ETH pool, a 0.3% fee is taken by Uniswap, and that 0.3% fee is equally split among all liquidity providers. So, okay, well, so that fee is coming from people doing trades on there. Okay, so where did the people get that money to do trades on Uniswap? Well, it's the same thing on MakerDAO, right? They got money from, getting paid, right, in their job, and they went to Uniswap and they swapped the USDC for ETH, and that's it, right? So you can track the money on every single trail here. There is no money being created out of thin air except at the central bank level, right? So when I see a lot of Bitcoiners kind of attacking DeFi and Ethereum and saying, oh, it's all money out of thin air, right? The absolute irony of that is that you're attacking the thing that you attack to pump Bitcoin up, or to kind of like show the merits of Bitcoin. the only money being printed out of thin air is from the central bank, is fiat, right? Because it's fiat all the way down. And that's kind of like the capital in the system. But everything within the DeFi bubble is paid and accounted for. There is no accounting errors here, right? There is no money being printed out of thin air. Everyone's paying what they should be paying based on the fees associated with everything. And the Uniswap LP token has value because it is backed up by the tokens in the liquidity pool. So all of this is accounted for, and that's why MakerDAO and other platforms feel safe using these things as collateral, because you can see on chain that it's all backed up. There's been no rug pull, right? It's not like a central bank that can actually take the money away, or even a bank in general, or a centralized institution can take the money out. Because Uniswap is decentralized, no one can take the money out of this liquidity pool except the LP token holders, right? Or unless there's a bug in Uniswap, which is highly unlikely. But basically, if everything's working correctly, it's decentralized, so no one can take that money out. And there's no money printed out of thin air. So that's what's really amazing about this, I think. And I think I've rambled on enough about that, but I just wanted to kind of give an example here, because I see a lot of people just fudding this, and it really annoys me, because they have such surface level knowledge of this stuff that they think that we're all just playing with monopoly money that we've printed out of thin air, when in reality the monopoly money is fiat. And the reason why a lot of this stuff is going up actually lately, especially crypto, is because the fiat money print is just going burr, right? That meme, it's going crazy no matter which country you're in, especially in the US, right? It's going nuts, and that's pushing a lot of the prices up. But within the crypto ecosystem, there is no money being printed. It is basically just all the fees being paid, all the fees being accounted for. So just wanted to run you all through that. So Loopring presented their new LRC token model today. So they've revamped the whole thing. I know I'll talk about Loopring a lot on the show here, but that's because they're doing so many amazing things, from the layer 2 exchange that they're doing, and now their token economics being revamped. And the funny thing is, I don't actually hold LRC at this point in time. I did once upon a time a few months ago, but I don't hold it right now. So this isn't just me shilling my bags or anything like that. But basically the TLDR here is that the LRC token is being revamped, and it's basically going to be a token that accrues fees, right? We've all seen this before within DeFi. It's going to be accruing fees from their layer 2 AMM and order book exchange. And these protocol fees are going to be paid to the liquidity providers, the insurers, and the Loopring DAO. So, and the protocol fees that are accrued are going to be accrued in LRC and ETH. And if they're accrued in other tokens, they will be sold for LRC or ETH. And then the protocol fees will be distributed in LRC or ETH. And they will be paid on a monthly basis, and changes to parameters in the future will go through the Loopring DAO. So it's a governance token as well. So I like this. I like, shoring up the token, making sure that you know what it's going to do, you know what function it has within your protocol. Everyone else knows it, right? And fee sharing and governance is just like is standard practice. So the success of the protocol, the more volume running through, the more fees generated goes to token holders. That's how it should be, and I think that's what Loopring's done here. But this is a lengthy blog post, about 11-minute read from Matt Feinstein here. So I suggest going to give it a read to see kind of all the detailed information here, and I'll leave a link in the YouTube description for all of you. So as I suspected, Devcon in Bogota has not been cancelled, but it has been delayed. There is no date yet. So for those who don't know, I think Bogota, I think that's how you say it. Anyway, the next Devcon was scheduled to be hosted in Bogota, Colombia in August. And I saw that and I'm like, I don't think that's happening. Obvious reason being the COVID-19, right? And the vaccine still not being rolled out, and any kind of real capacity yet. And for me, I can't even leave my country right now, and I don't know when I'm going to be able to leave the country. I think I can go to New Zealand. That's it. I don't think I can go to Colombia. That's for sure. But they basically put out this tweet and then a blog post describing that they, made this tough decision, which obviously is pretty tough to make, but it makes sense, right? There's no way they're going to be able to do it in August. I don't know when they're going to be able to do it. Maybe it won't even be this year. I just don't know, because we don't know how fast the COVID-19 vaccines are going to go out. We don't know how quickly, travel will return back to normal. I mean, I personally hope it happens much faster than slower, because I really miss traveling. I really miss these conferences. I remember I hadn't gone to an Ethereum conference that wasn't in Australia. So I went to EdCon in Sydney in early 2019. But besides that, I hadn't gone to an Ethereum conference until I joined SET, and then I went as part of business trips. And ended up going to so many conferences between, I guess, like the second half of 2019 and like early 2020. ETH Denver was the last conference in February of 2020, and then COVID hit. And that was just like so disappointing because I'd waited so long and I really wanted to go to all the Ethereum conferences. I absolutely loved them. And then this thing hit, and then people said, oh, we'll do virtual conferences. And it's just not the same thing. For anyone who's been to one of these conferences, you know how awesome they are. So I'm hoping that we get this under control for international travel sooner rather than later. I love traveling, absolutely love traveling more than anything, and it's been really difficult, not just for me, but I'm sure a lot of you, to be stuck in place. I don't know where in the world you guys are, but for me in Australia, last year I had a 3-month lockdown where we couldn't leave our house except for essential services down in Melbourne. And that was very difficult. We still had like an interstate lockdown where we couldn't travel between states. And now we can travel between states, and I think we can travel to New Zealand, but we still can't go anywhere else. And I mean, I've been to New Zealand. I love it there, but I kind of want to go to these Ethereum conferences. So I hope that we get there sooner rather than later, because it's been a tough, I guess, like year and a bit for everyone at this point, and it'd be nice to see everyone at a conference, right? But we'll just have to see how that goes and see how that plays out. So an update from Yam and UMA protocol today. So they've continued their collaboration and launched a uVol-BTC token, which is basically a synthetic asset that trades based on the volatility of Bitcoin. So this is an exotic financial product. This is something that you will not get exposed to if you're just a retail investor in the traditional world. So basically what this measures is the realized volatility of Bitcoin, this one in particular. And what the volatility kind of measures is like, what the volatility index kind of measures is the volatility of the underlying asset. So we all know that crypto is extremely volatile, but sometimes, or at least most of the time, actually, if you look at the chart, it just trends sideways, right? So the volatility might be low, but then, when there's a big move up or a big move down, that's when the volatility, goes higher or whatever. So, when the volatility is high, people like to trade this. They like to trade the volatility on top of trading the actual underlying tokens. And you do this with a synthetic asset. And this is exactly what UMA and Yam have teamed up to do. So really interesting to see these more exotic financial products coming to DeFi, because DeFi is all about democratizing finance, right? As I said, these products are usually reserved for non-retail investors. I mean, they say it's to protect people, but I don't think so. I think a lot of it's got to do with kind of crappy regulations and kind of like gating of financial products. So really great to see this. And you can check out the post in the YouTube description. So dYdX announced a $10 million Series B round led by Three Arrows Capital and Defiance Capital yesterday. So, I mean, dYdX is one of the OG DeFi projects, right? They've been around for a while. For those who don't know what they are, they're a derivatives exchange on Ethereum. They are working on a bunch of different things right now. They had an explosive year in 2020 in terms of growth, and they're working on a layer 2 solution with Starkware right now, which should be going live very, very soon, I think. But yeah, so it's funny because a $10 million Series B is quite a small round. And I don't think this is because no one wanted to invest in dYdX, right? I think this is because they're going to be doing a token soon. Because when you do a valuation that's this low, so a $10 million Series B round wouldn't lend itself to a very high valuation, right? You want to keep the valuation low if you're launching a token soon. And, I don't know who wanted to keep the valuation low, whether it was the funds, the investors, the team, or whatever. But in general, like when you see a Series B that's only $10 million, it means that they want to keep the valuation low. And I think that's because there's a token coming. So the token will probably come, if I had to guess, very, very soon, probably in the next few months. And then I think, they'll probably do an airdrop to people who have used dYdX and things like that, which is going to be another big kind of thing there. And then the valuation's obviously going to skyrocket from there because this is crypto and we love to speculate. But outside of that, it's really good to see them getting the money in the bank here because I think that dYdX is one of the best teams in Ethereum. They don't make as much noise as other DeFi teams, but they do, have a platform that's growing rapidly, has been limited by the scalability on Ethereum. But with their layer 2 version going live, I think, this year with Starkware, I think they're going to grow like very massively here. So really excited to see them to get this funding. And, from the 3 Hours Capital, obviously a big fund in the space, and Defiance Capital, which is another big crypto native fund that it was founded by Arthur0x, which has been a DeFi native crypto investor, I guess one of the best DeFi investors in the space. And this is what I was talking about before, how I thought there were very few DeFi investors that were actually kind of good and actually outperform the market. Arthur is one of them. He is early SNX, early RVER, very early. And I'm talking like when there were $5 million, $10 million caps. He wrote theses back then. He's been spot on about a lot of things. So really great to see him backing dYdX here. So a quick update from Zapper. You can now hide your small balances on the Zapper portfolio screen. So, you know, when you log on to Zapper and then you see your portfolio on there and you see all these tokens that are worth like $10 and it's not even worth the gas to trade them and it's just annoying. Well, now you can filter those out. So you can actually set the amount that you want to filter. So if you want to hide everything that's below $100, you can do that and it'll do that on the interface, which I think is a pretty cool feature. Full disclosure, I'm an investor in Zapper, so just wanted to get that out there. But I think, I'm an investor because I use Zapper. It's a really great portfolio tracking tool. You know, it's a really great way to zap in and out of things, or like enter and exit positions and stuff like that. So yeah, if you haven't checked it out yet, I suggest you do so. But you know, not enough shilling. I'm not going to show you too much on it. I just thought this was a cool little feature that they added here. All right, last thing to talk about, since I think we're going over time here. So I spoke about, I think, the last couple of refuels, the on-chain metrics that I've been watching lately. Now, I said I was going to cover this in the Daily Gwei data pump that's coming out next week, and I still will. But this is a bit of a spoiler for you guys before I put that video out. So I had been watching this metric too. And what this shows, and what Coinmetrics is showing here on this chart, is the number of addresses that are holding more than 10,000 ETH. Now, what this symbolizes, or what, I mean, Coinmetrics is saying what this could signal is that institutional investors are starting to buy ETH. It could signal that, but it could also just signal that big money is going into ETH, right? We've seen BTC coming down lately from its highs. We've seen the ETH BTC ratio increase. So that money, I don't think, is going back to, you know, the traditional world. I don't think anyone expects another crypto bear market to happen anytime soon. So they're rotating into something that hasn't kind of gone up as much, which is obviously ETH. Now, you can see that the growth here has just been huge, right? Especially in the later parts of 2020, early 2021, the number of addresses holding 10,000 ETH has gone up significantly. Now, it's not at all-time highs yet. It was higher in, I guess, late 2017, which makes sense, right? It definitely makes sense. But we're almost back to that level. And I think, you know, eyeing the chart here, it's about 1,250 unique addresses that hold more than 10,000 ETH. So it's not just 10,000 ETH, it's anything over that. So some of these addresses could hold 100,000 ETH or whatever if they're like mega whales. There might be some exchanges in there as well. I think they do filter out exchanges, but it doesn't matter anyway because there's only a handful of them. But yeah, the fact that this is going up is one metric that I look at, and I look at closely, because if the whales who basically have a lot of capital, they some of them can move markets. If they're accumulating something after this downtrend, right? If we break out of this downtrend, then to me that just signals that a price rise is going to come or continue to go up, or it's going to continue to go up, because the big money and the quote unquote smart money is betting on that happening. So I think it's obvious that this is what's going to happen. I mean, I'm positioned for that. Obviously, as I said, I've still got my ETH that I never sold any ETH. But at the same time, not investment advice, but just something that one of the key metrics that I track when trying to, you know, find out when ETH's going to go up. And I think we saw that happen, right? End of 2020, I think ETH started pumping before these people started getting exposure to it. So, you know, not every whale is a genius. They just have a lot of capital. And then when they see that kind of market shift, right? A shift in the markets from BTC only to, okay, well, ETH's now in favor, let's buy some ETH. And they rapidly do that, as you can see from this growth. And it's actually gone up so much that I think a lot of whales were underexposed to ETH here. I think a lot of them, you know, were overexposed to BTC. And then when BTC kind of came down, cooled off, they were like, okay, well, I need to get some more exposure to ETH. And that's why we see this shot up in growth here. So yeah, that's one metric I'll be covering in more detail next week on the Daily Gwei data pump video. So look forward to that. And that's it for today's episode. So give the video a thumbs up if you haven't yet. Subscribe to the YouTube channel so you don't miss future videos. Join the Discord channel, subscribe to the Daily Gwei newsletter, and I will catch you all tomorrow. Thanks, everyone.